All right, if you've been following crypto, you probably think the biggest story was the launch of Bitcoin and Ether ETFs. And you're not wrong. But that was just the warm-up act. What came next blew the doors wide open. So let's get right into it.
So let's quickly set the scene. 2024 was without a doubt a monster year. We saw the very first spot Bitcoin ETFs go live in the US in January, and then bam, Ether ETFs got their turn in July. It was a total game changer, right? For the first time ever, anyone could get exposure to the two biggest names in crypto through a simple, regulated product they already understood. A huge step forward.
But here's the twist. As huge as those launches were, they were really just the opening scene. The main event, the thing that really unlocked the potential for dozens of other crypto assets, was a quiet little rule change that most people didn't even notice. And hey, you don't have to take my word for it. The second this happened, Bloomberg's top ETF analyst, James Seyffart, was all over it. He knew this wasn't just another one-off approval. No, this was an entirely new framework, a framework that was about to unleash a flood.
Okay, so to really get how big of a deal this new framework is, we kind of have to look at what the world was like right before it. Let's take a quick look back at that first wave.
And I mean, things moved at lightning speed. Bitcoin ETFs land in January 24. Then, just a few months later, in a move that honestly shocked a lot of people, the SEC gave Ethereum the green light. By the end of that year, it was crystal clear this wasn't some niche trend. The demand was absolutely massive. And when I say massive, the scale is just wow. Over $100 billion poured into these Bitcoin ETFs in under a year. This proved it wasn't just for the crypto diehards anymore. This was a mainstream blockbuster. It showed that regular investors were absolutely hungry for a safe, regulated way to get into this market. Which brings us to the moment everything pivoted. September 17, 2025. The SEC approved something called New Generic Listing Standards. I know, it sounds super technical and boring, but trust me, this quiet little rule change is the entire reason we're talking about a flood of new crypto products today. So here's how to think about it. It's kind of like getting a building permit. The old way was like trying to build a totally custom, one-of-a-kind mansion. Every single plan had to go through this long, painful, bespoke review that could drag on for 240 days. The new way, it's like having a pre-approved zoning code. If your building, or in this case, your ETF, meets the clear, established standards, you can get approved in as little as 75 days. It just completely changes the speed of the game.
And the impact was instant. With that huge barrier to entry basically gone, the floodgates just burst open. All of a sudden, you had more than 90 active applications for new crypto ETFs sitting with the SEC. This wasn't a trickle, it was a torrent.
Okay, so what are all these new products exactly? Well, to really get this new ecosystem, there are two key terms you need to know because you're going to be hearing them a lot: spot and staking. First up, what does spot even mean? It's actually really simple. A spot ETF holds the real thing. Think of it like this. A gold ETF holds actual physical gold bars in a secure vault, right? Well, a spot crypto ETF does the exact same thing, just with digital assets. It holds the actual cryptocurrency in a super secure digital vault. So you get direct exposure to the real asset without any of the headache of storing it yourself. Second is staking. You'll see this with coins like Solana. It's where you can lock up or stake your coins to help keep the network secure. And for doing that, you get rewarded, kind of like earning interest in a savings account. Now, this leap from just a Bitcoin ETF to a whole universe of altcoin ETFs, it's huge. Here's an analogy. It's like going from the very first iPhone, one amazing revolutionary device, to the launch of the App Store. Suddenly, it wasn't about just one product anymore. It became a platform for an entire ecosystem of new things to be built.
So with this new playbook in place, the race is officially on. The big question on everyone's mind is, who are the frontrunners to become the next big crypto ETF?
And believe me, the calendar is already jam-packed. You've got heavy hitters like VanEck, Grayscale, and Bitwise all jumping in, with some key deadlines coming up fast in late 2025. The ones everyone's watching are Solana, Cardano, and yep, even Dogecoin is in the mix. And then there's XRP, where the anticipation is off the charts, especially because its futures product already has over $1 billion in it.
And if you really want to know where the big institutional money is focusing, just follow the paperwork. You can see that while a bunch of different assets are in the race, the major players have really zeroed in on two main contenders for now, Solana and XRP. They're leading the pack by a pretty wide margin, which tells you where these asset managers think the next wave of investor demand is heading.
Okay, we've covered the history, we've covered the game-changing rule, and we've covered the key players. So now let's get to the most important part. What does all of this actually mean for you as an investor?
So what's the real takeaway here? What's the bottom line? It really boils down to two simple words: access and choice. The crypto world isn't some walled-off garden for tech experts anymore. It is showing up in the regulated, familiar ETF wrapper you already know. But of course, more choice always brings more questions.
So here's the first big knowledge gap for you to think about, and it is the elephant in the room. This whole security versus commodity debate. How regulators, especially the SEC, end up classifying these assets will be the single biggest factor in determining who wins and who loses this race. It is the biggest question mark hanging over the entire space.
And next, let's talk about staking. Yeah, earning rewards sounds awesome, but how is that income going to be treated for tax purposes inside an ETF? And what are the hidden risks when a massive fund is staking billions of dollars of other people's money? These are brand new, complicated questions, and frankly, we don't have all the answers yet.
And finally, with all this new choice, a new responsibility really falls on you, the investor. When you're looking at a sea of new options, how are you supposed to tell the difference between a truly foundational technology and a project that's just riding a wave of hype? Now, more than ever, doing your own research is absolutely essential.
When you step back and look at the big picture, what we're really seeing are the walls between Wall Street and the crypto world just crumbling down in real time. And as these ETFs become just another ticker symbol in a normal portfolio, it really makes you wonder, where does the line between traditional finance and digital assets even exist anymore? Because that line is blurring way faster than anyone ever thought possible.